Varga from the Hungarian Central Bank, Magyar Nemzeti Bank, or just put it shortly, MNB. And in the next couple of, let's say 50 minutes, I'd like to share our approach to climate finance, and also provide an insight into very practical measures that we implemented over the years. But first of all, let me say a big thank you for a very kind invitation to the Österreichische Nationalbank und Bundesamt aus.
So thank you very much.
I'm representing a central bank on the stage. It's most basic question, what do I do here? And what the central bank, why the central bank should consider climate change as something that is important. And the very short answer is because of our mandates, our legal mandates. Probably most of very well know these mandates. So for a modern central bank, achieving price stability is a primary mandate. There's more or less a consensus that climate change has an impact on price dynamics. However, there's a lot of uncertainties around that, and there's an open discussion in the central bank community of the required involvement of monetary policy. Safeguarding financial stability system. I think at this point the question is whether the current regulatory frameworks are properly able to capture risks associated to climate change. And it seems that climate risks has very different features in terms of the data we need, the time horizon that we have to capture, and so on. Supporting the government's economic policy, for example, policies related to any sort of climate actions. This is a very typical mandate, especially in this region. And it's not a direct mandate, but balance sheet protection. So central banks have a fairly large balance sheet, and these assets can be also exposed to climate risks. What is somewhat unique in the case of Hungary, that since 2021, they do have an explicit green mandate that says that we can support the government's policy-related environmental sustainability. But only, and it's very important to highlight, we can only do so if it doesn't jeopardize our primary objective, so price stability. So the most important thing here is that there's a hierarchy of mandates, central bank mandates. And at this point, I'd like to turn to the audience, and please grab your phone, because I have a question for you. And hopefully you will see a QR code soon. And yeah, so on the QR code, there's a question asking, given the legal mandates of the two core objectives of central bank, price and financial stability, what do you think, to what extent should a central bank, for example, your central bank, Austrian central bank, or the ECB, or your national central banks, take part in the fight against climate change? So I think A is only, is it absolutely necessary to achieve these mandates? B, as long as it doesn't endanger price and financial stability. C, it could have a little negative effect. Or D, it can even have slightly or major negative effect on those objectives. Can we have the results, please? No. For a second, I've seen something. You can just say the results loudly if you want.
Yeah, we see it.
Okay, well then.
I can show you. So this one here, I think the second is
okay.
winning, yeah? So the second is.
Wow, it's
45% is for the.
Oh, okay.
And the others.
Interesting. I will show you why. Okay, can we switch back to my slide? Okay, I was asking this question because of two reasons. First, I was very curious about the opinion of an experienced audience. Second, that we've done a survey in Hungary 2 years ago, and the main motivation of this survey is to ask the public, so to get an insight into the public opinion, what do you think about a central bank, the MNB, doing green measures? And just quickly, one of the key messages from this survey. So Hungarian people are very climate conscious, they are aware of climate change, and they are afraid of the negative consequences. Green finance is not something that everyday people know. However, we've seen some openness for such financial products. typically, there's a limited awareness of what the central bank is doing. However, we experienced some openness for any sort of green central bank initiatives. For example, 50% of the respondents said that it's rather important for a central bank to take action against climate change. 21% said it's very important. What is more striking may be that it could also increase the trust in the central bank. So 37% of the people said that they would have a better trust in the MMB after such green measures. And as you might know, trust is the single most important in finance. And to the question that you just answered, you can see the aggregated answers on the bottom, on the top, which is very similar to your results. That's why I said it's surprising. And so my takeaway from these answers is that people see the trade-offs between green measures and traditional mandates. So the majority says that we should be active only as it doesn't endanger of our core objectives, right? Okay, and going forward, I'd just like to quickly show you 3 of our measures, how we practically implemented sustainability. So first, back in 2021, when we have received our a green mandate, we try to figure out where can we make an impact in the Hungarian economy. And we realized the importance of the housing market. So generally, housing market and especially residential real estate have a very low energy efficiency profile. But this sector is responsible for around 1/3 of the total energy consumption in Hungary. That's massive. Home ownership rate in the region is very high. It's over 90%. It's the same for most of CEE countries, which means that just taking out a mortgage and buy a house is probably one of the most important financial decisions in our life. And what we have seen or haven't seen was green financial products on the loan market, for example. And to address these challenges, we have introduced 2 monetary policy programs. The Green Home Program, that was a refinancing program. We gave financing for banks, and they had to use it to provide green mortgages for customers. And the Green Mortgage Bond Purchase Program, that was an asset purchase program to kickstart the green mortgage bond market. This is a covered bond where the underlying collateral is an energy-efficient real estate. I don't want to go into details because NGFS reports capture these 2 programs very well, so I can just recommend those reports. What is an interesting takeaway, especially for myself, that in terms of the sizes, these programs were fairly small comparing to other monetary policy measures, but we were able to really kickstart these markets in a very early stage. So what you can see on this chart, there was a surge in the new loans. We had a modern energy-efficient collateral. And what is not on the chart, that all Hungarian mortgage banks could successfully issue their first green bond series. These programs, we had to close these programs in mid-2022 because of the change in our monetary policy stance. Inflation picked up, and we had to tighten monetary policy conditions. What we can do now and what we are doing, we have sort of like micro-level actions. We are not actively purchasing anything on the market, but I just mentioned 2 things on the bottom. So, for example, we have a continuous dialogue with the Central Statistical Office to redefine and review energy consumption benchmark to properly assess the effectiveness of green loans, for example, for benchmarking purposes. And there's a project with local Hungarian mortgage banks to standardize impact reporting, because we see very heterogeneous practices, and hopefully in the coming month we will be able to publish a joint so-called position paper with the local banks to set out the best practices. Unfortunately, what you also see on this chart, that the share of green loans remain low, which has obviously many reasons, not just the development or underdevelopment of green finances. But as a response to that, we have just recently modified or so-called borrowing-based measures. Borrowing-based measures are macroprudential tools, and the goal of such measures is to limit the maximum loan that you can get from your bank, strictly from a financial stability perspective, so to avoid any excess leverage on a system level. Debt to service income limit there. So it says how much loan, how much of your monthly income can be used for debt repayments. And for case of green loans, it has been raised from 50 to 60%. What is a green loan? You can see the criteria on the bottom. Loan-to-value ratio, well, this is essentially how much loan can you get from the bank as a percentage of the property value, and this was increased from 80 to 90% effectively from January this year. What I'd like to highlight here, or emphasize, that the rationale behind this is not just to supporting green markets or green housing, but also is very risk-based. Two factors here. So first, green homes have a price premium. And it's not just a theory, we have empirical evidence for that for Budapest. My colleagues just published a paper 2 years ago. And if you live in a green home, that means you should have lower utility costs, which means at the end of the month you have more money in your pocket. So from a credit risk perspective, such loans are better than non-green ones. Before this modification, we have assessed the potential volume of new loans. So before we implemented these changes, we've done our homework, and overall we concluded that if we take these steps, the overall risk profile it would be close to risk neutral on a banking sector level, which is a good news for our mandate regarding financial stability. And lastly, the third measure. This is the green preferential capital requirement. It's not new. It's sort of our flagship program of MMB as a supervisor. So it was introduced in 2020. Banks can reduce their capital requirement within the Pillar 2 if they hold green assets. Lower capital requirement, lower costs for the banks. So essentially, this is an indirect incentive for the banks to prioritize green loans and bonds. From a financial stability point of view, the important thing that this discount is kept at 1.5% of risk-weighted assets, so we can calibrate the maximum risk that the banking sector takes. Eligibility criteria is wide. Typically, it's based on EU taxonomy, but we have to relax it in many cases to be more suitable for the local characteristics. And just one last thing to highlight here. The participation is voluntary, but the banks have to collect data and supply data to the central bank. That is, I believe, mutually beneficial because they have data, which is incentivized to collect those data. And we received important or very interesting data sets. And my colleagues just published a working paper this year. They used these loan level data and proved on an empirical basis that loans who has green loan, either in renewable energy or electromobility, they have a lower probability of default by 1.5 to 1.7% than other firms who have like regular loans. The chart shows the survival probabilities of those firms over the time horizon. Thank you, key takeaways. I just want to say one thing. So the macro environment has rapidly changed in the past couple of years. And what I see that for policymakers, well, the green is not always on the top of the agenda. But my message here that I think With respect to our legal mandates, banks can, or at least the Hungarian banks Hungarian Central Bank was able to find those sometimes small chances to give a support for the green financial markets. Thank you very much.